All right, well, thank you, everybody. Welcome to tonight's Zoom at 8. My name is Julianne Peterson. I'm with Old Capital Lending. And as you know, Old Capital has been around for over 30 years. We've closed 5,800 loans. We close about $1 billion a year. And so when you think of Old Capital, you think of a mortgage lender. But we're more than that. We are a relationship lender. So if you guys are looking for a GP, a sponsor, LPs, attorneys, property managers, you can find them when you talk with Julie at Old Capital. So let me know if there's anything I can do for you, specifically on loans. You know, Zoom got started over a year ago, and we've had some amazing speakers, and tonight is like no other. So I want to make sure that you guys know the purpose of this meeting is so that we can network, but also to learn something in either multifamily or in commercial assets. So today we're going to learn about multifamily. And if you have somebody special that you are doing business with, or you think is something that other people would like to know about, always ask me. I'd love to have them come on our show. And again, the goal of this is to create community, to look for limited partners, and then with those, we can help close deals. We have closed helped close 2 deals here. So if you have a deal that, of course, if Old Capital's with you, we'd love to be able to help close that. All right, so the people that are new, that we have never met, I'd love for you to share with us for about 30 seconds where you're located, where you're looking, and how we might be able to help you. So Sean Jones, tell us a little bit about yourself.
Well, I'm here in San Diego County. Specifically, I live in San Marcos. My business partner, I don't see him on here. We'll be on momentarily.
I'm here. I'm just listening.
Oh, there you go. I was just talking bad about you. We specifically buy mortgage notes anywhere in the country except for the Northeast, but we're starting to look a little bit in the Northeast. But we're just actually looking to connect with more people in the real estate industry. Really looking to connect with some asset managers and maybe hedge fund managers, because we're always looking for more notes. And right now, I know there's going to be a lot of things hitting the market, so we just want to build those relationships.
Great, thank you, Sean. And by the way, everybody, make sure that you're putting your information in the chat box. Your name, your phone number, ways to connect with you, and where you're looking to purchase. Now, maybe you're in South Carolina, which is a great place to be boots on the ground for many of the investors. So make sure you tell us, I'm boots on the ground for somebody that's looking in the area, okay? Tony, I want to hear from you.
All right. Hey, hi, everybody. This is awesome.
Hey.
This is the first Zoom call that I've been on with this many people. This is really, really awesome. Well, let's see. I'm from everywhere. I know that sounds silly, but my wife and I, we are out of the rat race. We have ourselves a rather, I'll say, nice RV rigs, and we have been traveling all over the United States. And currently, we've stopped off in Las Vegas to visit with my son, and we invest in Colorado and in the Tulsa market. We do have an apartment complex in Colorado, and got about 54 single-family homes in the Tulsa market. And yes, I've got a complete server system, everything in our RV that we manage. Well, let's put it this way: we manage our managers of all of the properties that we have and the property management companies that we have, and we do all of that right from wherever we're at. And we're looking to.
So then, Tony, we could call you boots on the ground everywhere. Tony is boots on the ground.
You bet.
So, Tony, you get to share more about you in the breakout sessions. Now, remember, after we meet with George, we're going to be able to talk amongst ourselves. So make sure you guys stay tuned. Thank
Awesome.
you, Tony.
You bet.
All right, who else is new here? Let's see, Tina Weaver. I want to hear from you. Please introduce yourself.
Hi, Julianne. Hi, everyone. I'm Tina Weaver. I am from Sunnyvale, California. I am currently looking to invest in Tucson and Arizona in general, Utah, Florida, possibly Colorado, possibly Texas, but the top three would probably be Tucson and Utah, just because they're closer to me so that I could get out there more. But it's good to have some boots on the ground for the other thing, for other areas. I know I'm in California, and so I'm kind of heading out of California for multifamily because it's too expensive and we have rent control in California. So, but there are still probably some opportunities occasionally. So I'm hoping to, if you need, I'm, working on trying to build relationships. I am actively looking for properties in Tucson right now. So if I find one, I might most likely would need someone to assist in, either doing a joint venture. But I also am working on building my team. So I'm new to multifamily, but that's I'm looking forward to learning a lot and helping out wherever I can.
Thank you, Tina. Welcome. Now, William, can you just, William Rodriguez, can you just tell us a little bit about yourself? I know you're in business with Sean, so real quickly, tell us where you're at, what you're looking for.
Yeah, my name is William Rodriguez. I'm from Ocean City, California. Started a business with Sean Jones. We just spoke a couple minutes ago. We're looking to connect with asset managers, hedge fund managers, and obviously we're buying, performing, and non-performing notes. That's what we're sticking to right now. But we're definitely open to doing some commercial deals just because I know they go hand in hand. So looking forward to connect, network, and do business together.
Thank you so much. Appreciate it.
Yeah.
Make sure you put your contact information below.
Will do.
Mona, have you introduced yourself here? I know I've seen you other places, but I don't know if you've introduced yourself here. So make sure we know who you are.
Yes, I have not done it here, so thank you for the invite and the opportunity. So everyone, my name is Mona Hall McKenzie. I am a commercial broker with Keller Williams during the day, and I'm an investor in all the other times of the 24-hour cycle. So I'm actually located outside of DC in Upper Marlboro, Maryland. I am licensed PA, Maryland, DC, Virginia, North Carolina. Boots definitely on the ground in the DMV area, so I can help you with your commercial properties. I will put my information in the chat, so look forward to networking with everybody.
Thank you, Mona.
Thank you.
Welcome. Duck Tran. I know I've seen you other places, but have I seen you here at Zoom at 8?
No, this is my first time here. Thank you for inviting me. My name's Duck Tran. I'm in the Houston area, so I'm here just trying to network, interested in investing in a multifamily. I have a team forming at this time, but I want to learn more from what all you guys have, and of course from you too as well. Thank you.
Excellent. Thanks so much. All right, Marissa, have you introduced yourself here?
No, this is my first time. Thanks for inviting me. I'm Marissa Feliciano. I guess I'm located in San Diego, California, and by day I work for an architecture firm, and we build high-density senior living and student housing. So I'm interested in land for commercial real estate, but by night I'm looking to learn about real estate investing. So I'm here as a beginner to meet people, start networking, and start learning.
Excellent. Thank you so much. Welcome. Sandia, thank you so much for coming. I want you to tell everybody about yourself.
Hi, everyone. My name is Sandia Seshadri, and I'm a Dallas-based syndicator and passive investor in the Brad Sumrock Network. If anyone needs any help with passive investing in real estate and wants to have a conversation, I'm your resource because I've invested in 15 deals, and most of them are performing well, but there's one or two that are not. and I can tell you what to look for. I have a free checklist I make available to anyone interested so that they don't make the same mistakes that I did.
Sandia, we need to get you on as a speaker, so let's make sure that you and I talk about that. All right, and Sandia also is in a deal, so if anybody is looking for being an LP.
Excuse me, let's stop
Yes.
right there. I
Yes.
only do 506B deals, and I cannot discuss them with people I don't know. So please, let's not
Gotcha.
discuss my deals. Thank you.
Gotcha, no problem. All right, who else is in the house that has never been introduced?
I
Anybody?
haven't been introduced. I've been here once, but I wasn't introduced.
Please tell us about yourself.
Okay. Hello, everyone. Good evening. I am Alicia Milton. I am currently in Arizona, boots on the ground here, Phoenix market. We're extremely busy, so I know you heard about us. I am a broker with KW Commercial and also an investor here in this market. Have co-star as well.
Excellent. Boots on the ground, Phoenix. All right, who else has not been introduced is first time here? Daisy, have you introduced yourself to us before? It's been a while. Daisy, there you go.
Hi, yes, I'm here. Hi. It's been a while, so I can do a quick reintroduction. Name is Daisy Serrano, currently in LA, and actually in the process of relocating to Texas. So pretty soon, my husband and I will be making the move and dropping the license plate, as Julie likes to say. And we focus on, let's see, 100 plus units, really focused mostly on the San Antonio and DFW areas. So actually see quite a bit of familiar faces here. It's nice to see everyone.
Excellent, thank you. All right, well, we also attract syndicators. We also attract property managers. We also attract insurance brokers. So I also have a, Mark, you are a cost segregation guy. So why don't you go ahead and just introduce yourself, take a little bit of time, let us know how we might be able to get a hold of you for cost segregation.
Sure, thank you. I put my contact information in the chat, so you should be able to take a look at it there. For those of you who are not familiar with cost segregation, what it does is when someone buys the building, rather than do a 39-year straight line depreciation or 27.5-year for multifamily, we do accelerated depreciation by breaking up the building into various components and thereby reducing their IRS taxes through accelerated depreciation. There's a whole lot of more detail. I don't know how far in depth you want me to go, but that's kind of a quick overview.
Yes, I think everybody should know about cost segregation. So certainly talk to Mark in the rooms when we break out, or make sure you contact Mark. Kimra is also one of our leading property management companies. So Kimra, if you would take a moment and tell everybody about yourself.
Thanks, Julie. Hi, everyone. Good to see y'all tonight. We're in the Southeast, Midwest, and Texas right now and have the ability to grow outside those areas. I've been in the business. I've changed it to 30 plus years, because when I used to say 40 a few weeks ago, people were like going, what? So it's 30 plus years from here on forward. Anyway, yeah, done it all, been with really big institutional groups like Aimco and Equity Residential for 20 years, went out on my own about 15 years ago, and we're having a ball. We do property management, asset management. We do some investing in deals as well. So we can do due diligence, construction management. We got it all going on. I put my information in the chat, and we'd love to connect. We work with several groups several folks on the call. And hello, everyone.
Thank you. It's so wonderful. Thank you, Kim. All right, JT, he is a insurance broker. He's one of my partners. JT, if you'd introduce yourself.
Yeah, thanks, Julie. Hey, everybody. I'm JT Lynch. I'm a producer with Rainy King Insurance. We are licensed nationwide. I'd love to help you with your current properties. I do a free policy review for you. any property that you're looking to submit an LOI on, if you send me rent roll, the T12, and your offering memorandum, I can do a free insurance indication for you as well. So it's good to see everybody, and thanks a lot, Julie.
Excellent, thank you. All right, and then we do have some sponsors in the house. These are folks that have the experience, net worth, liquidity that can help you on your deal. Remember, if you're looking for agency debt, you have to have those 3 items. So Sandia has mentioned she's available as a sponsor. That's awesome. Jim Biggs, can you also let us know about what you got?
So I'm very interested in trying to help particularly newer investors and people that are trying to get their first deal across the finish line, or anyone that's been in the business a little while but feels stuck. If you've got a deal and you need some help, I want to try to lend a hand.
Excellent, thank you. Chris Taug is in the house. He is also a syndicator. If you could also, Chris, introduce yourself.
Sure.
Chris Taug.
Cal,
I hear you.
Realtor since 2014, lives here in Austin, Texas. I have a 204 unit that I was the lead syndicator and operator for that property out in San Antonio, Texas. Constantly looking for more deals, more people to partner with in the Phoenix, Tucson, San Antonio, and Austin area. We're also looking into Atlanta, Georgia most recently. So let me know if you're looking to partner, whether it's boots on the ground, capital raiser, or something that you have value to bring to the team. Thank you very much.
Excellent, thank Chris. Alan Stewart, you are a sponsor, is that correct?
That's correct.
If you could introduce yourself.
Well, hi everybody. Alan Stewart. I'm based in DFW. I've been doing multifamily for about 8.5 years. After I had a 20-year managed consulting career, done 5 GP deals, another 11 passive deals, continuing to focus on DFW and perhaps a little bit in the greater Austin area. And that's it.
Did you put your contact information below in the chat box?
I will do.
Sounds
Thanks,
good.
Julie.
Thank you so
My
much.
favorite word, Austin?
Say again?
What's that, Chris?
Did I just hear my favorite word, Austin, Texas?
Yeah, bud. Yeah, bud. You know, you might see me down there.
All right, come on down.
You got it.
All right, you guys. So these are your partners. These guys can help you take down a deal, or maybe they can assist you in your learning. So make sure that you're reaching out to folks that are in the room, in whether it's outside or potentially in our breakout sessions. All right, so let's go ahead and reach out. We're going to move now into our speaker. We have Jorge Abreu. He is an active and passive full-time multifamily real estate investor with 14 years of experience. He has 1,720 doors on the GP side and over 14 doors on the LP side. He was born and raised in Miami. He got his degree in engineering from Florida International University. George is the CEO of Elevate Commercial Investment Group, as well as he owns a construction company called JNT Construction that focuses on helping multifamily investors with their full renovations. George is based out of Dallas and currently owns properties in Texas and Oklahoma, but he's open to other areas as well. His strong points are locating deals, due diligence, executing CapEx, and raising equity. George shares his life with his wife Tasha Abreu and 3 princesses, Mia, Ava, and Ella. A busy life there, George. You are outnumbered at home. Do not leave the toilet seat up for sure.
No, I've been well trained.
That is excellent. Now listen, I welcome you to today's kind of, I thought of a theme for today. It's called Life, Liberty, and Pursuit of Happiness. And I think we can probably discuss that all with you today. I want you to take your seat at this table and I want you to own it and tell us a little bit about your life. How did you get started? Where you got started actually as a kid in Florida. Tell us a little bit about that.
Yeah, thank you for the intro, by the way. and for the opportunity to get on here. You've got something great going on. So as far as myself, yeah, this real estate journey started in South Florida, where I was born and raised, and I think sometime when I was pursuing my degree in electrical engineering, I decided I didn't want to be an engineer. I wanted to own a business. I think that kind of came, some of my uncles and my father owned their own business. So I didn't even think about this before, but I was just talking about this on a podcast. One of my uncles actually owned several apartments growing up, so that might have rubbed off without even noticing. But
What
point
an
is,
inspiration for you.
yeah, definitely. Point is, I started looking, what kind of business can I own? What do I want to get into? And I kept kind of going back to real estate investing. Started with single families. Did enough deals to where I quit my W-2. That was about 15 years ago now. And started doing a lot of single family, wholesales, flips, some holds. I got into some smaller multifamilies. Kind of went on this journey of real estate investing, and really found my niche in fix and flips. And to scale the fix and flips, that's why I started the construction company. I got burned twice by contractors. Second time was the last time. That's when I decided to open the construction company. And then about 4 years ago is when I was kind of introduced to the world of syndication and large multifamily properties. It was actually a client of mine on the construction side. I was doing the renovations for them, and started talking to them and asking questions, and they told me about the syndication and how they brought in all these investors to close on the deal, and kind of just blew my mind. I knew real estate investing, but I didn't quite know that side of it. And I fell in love with it. It's instant scale. It's what I was working so hard to do on the single family. And you can do it literally.
Now, was your single family in Florida, and then you came to Texas, or where was the single family?
I can. It started in Florida, in Miami. The market was doing amazing. We were making, on some of our wholesales, we were making $40,000 literally just assigning the contract, not even touching the property. But that all came to a crash, 2008. And luckily we were not holding a lot of properties. We were doing a lot of fix and flips, and we got lucky. We didn't see it coming. I knew something was going to have to give the way the prices were going, especially there in South Florida. But once that happened, you couldn't touch real estate there. It took a while to kind of stabilize. So that's when I actually looked into Arizona and Dallas, Phoenix and Dallas. And what I saw in Dallas was just crazy. It was so much more stable, and the economy just made sense, and decided to make that move. And then started doing a little bit more. That's when I started. I picked up some smaller multifamily properties and started holding some more properties. Just because that's where we're kind of at in the market. And yeah, that started.
So can you take us through your first deal? Can you tell us, where did you get the capital? How did you choose it? Why did you choose that particular asset? What have you done with it so far?
First multifamily deal, right?
Yeah.
Okay. It was a smaller one. It was a 37 unit, 36 when we bought it, and then we turned the office to a unit. We did a complete transformation of it, pretty much. Not that we kicked out every single tenant, but we came in there and we really changed the exteriors and then started upgrading any vacant units. We did full upgrades. We knocked out some walls. So everybody kind of got the idea that, okay, you know, either we're going to have to pay for these upgrades or move on. And we ended up doing a complete, the tenant base completely changed there. So we refinanced that June. Yeah, so we refinanced it in June.
This past June?
Yep.
Oh, great. So when you refinanced, did you take your investors out or did you hold on to them?
So that was during, you know, COVID had hit already, so the reserves, the reserves kind of killed us on the cash back. We're giving the cash out portion of it. But there's a large cash out there. So when we do that, we're not taking the investors out of the deal. To begin with, they got a lower percentage than usual because we knew it was going to be, we're going to be able to build a lot of equity in there and get them a big cash out on the refi. So it's not your typical GP LP split.
Gotcha. So when you look at these, this first one, how did you decide? Were you doing a 80-20 split, a 70-30? How did you decide how you structured that deal? Did you bring in a bunch of capital that you had from your business, or did you bring it from capital raising?
Yeah, so I mean, this being our first large multifamily deal, we brought on a co-GP, and the one part that we didn't really have when we started this, we hadn't had to raise any equity for our deals in the single family. In the single family, we had a couple private lenders and hard money lenders as well. So without that experience, we decided to bring someone else on, and so they brought the capital needed and the experience to sign on a loan. And that's how we ended up taking that. We did everything else. You know, we found the deal. We did the asset management. We did the CapEx and boots on the ground and all that good stuff.
Right. Excellent. So are you still have that one? You're still holding on to that. What's your time frame on that? Are you guys going to hold it for another 5 to 10 years?
Yeah, the plan really is to hold it for a while. You know, with majority of the capital or coming back to the investors. There's no huge rush to sell it, and it's cash flowing nicely. So yeah, the plan is to kind of just keep it there.
So you have quite a few doors under your belt. Do you typically run them the same way? When we asked another syndicator who joined us, Andrew Cushman, he said each one is different. Can you share with us your structure? Do you usually have them the same? Like they have a rehab component? What is it? What kind of deals do you look for? And does that structure, is it the same or different?
Different on every single syndication we've done. It's been a little different. Before COVID hit, you know, we were looking for the deep value adds, heavy lifts, leveraging the construction company and knowing that we can come in and do that work. Since COVID hit, financing has gotten a little more difficult. It's kind of, I mean, obviously, you know, but you know, the bridge loans are coming back. But we've kind of changed our criteria a bit and looking for a little more stable deals and more play on the expenses and the managing side of it, and not such heavy value adds.
So that's been a good thing though for your construction part of your business. I mean, you're pretty unique in that way, in that you can take down these properties and provide the construction piece of it. How has that been? I mean, I would have to think you are very, very busy. How, can you tell us a little bit about, like, where do you spend a lot of your time? How do you manage that?
Yes, I mean, luckily I've been able to build a really good team on the construction side. So my involvement on the day-to-day of the construction side is very limited. I mean, I'm still the one with the vision and the one directing it and making sure we're heading in the right direction. But you know, I'm not the project manager, or I'm not you know, my team is the one checking on the projects daily, and everything is very systematic. We use a lot of technology and software to keep everybody on the same page. You know, I can look at our project management software anytime and kind of see where we stand on every single project that we're working on. So I'm not that busy there. On the investment side, I'm still building out those systems and building the team. So I spend a little bit more time on the investment side.
Yeah, it's tough. Although I remember about 18 months ago, you had a lot of capital raising that you were bringing to deals. Have you noticed the capital raising has gone down for you? Has it remained the same? Has it grown in COVID?
Like the interest of investors?
Yeah,
or?
I mean, we always encourage people to survey their clients, their investors, right? I'm assuming that you are doing the same because you're looking for new deals. What have you found? What have you found with your investors? Is it are people keeping their foot on the gas and wanting more investments, or are they kind of backing off?
For a while there, they were definitely backing off. You know, when there was a lot of unknowns.
George?
Yeah, can you hear me?
Yeah, now I can.
Okay. Yeah, for a while there, they were, a lot of investors were kind of sitting on the sidelines, wanting to see how things played out. As of late, you know, we just finished raising equity on one deal, and we jumped straight into another one, and I think we may be oversubscribed on that one in just a few days. We're going to be jumping into another one. So, I mean, right now, it's investors definitely want to deploy their funds, is what that's what I see.
Yeah, that's excellent. So liberty, life, we've got life, liberty. Liberty meaning the condition in which an individual has the ability to act following his or her will. So liberty, you have created quite a company. You've got, you know, you're working, you know, long hours. How has that been for you? I mean, I have to think with even just my business with COVID, things, we go from early to late. How has that impacted you, your family, your business?
Well, I can give you
We
an
all
example.
want to get into this so that we have liberty, so we can make our own decisions. But darn, there's so much that we have to do. We can't utilize our liberty, right?
Yeah,
Meaning,
no.
you know, the open space or time.
It's a good one, especially for tonight. I mean, I'm here right now, and the second we get off of this, I've got to go drive to Houston and go on a 4-hour drive. That was kind of the story I was going to tell you, where I was supposed to be heading there already, and I was going to try to get there before 7. Worst case, I was going to do it in the truck, somebody else driving. Well, that someone else, actually, his spouse just got tested positive for COVID, so he's not going. Yeah. So I decided to stay here, you know, make sure I got on this, and then I'm gonna head to Houston, going over there to check on some properties I own, and then also doing a due diligence for a new acquisition, a client's, not one of mine.
Excellent.
So yeah, I mean the hours are, the hours are kind of crazy. The way I see it is, I know what I've done with my other companies, and I know it's a lot of hard work in the beginning, but if it's set up correctly, then it pays off. I still have the luxury and flexibility to make sure I don't miss any important events. You mentioned my 3 daughters. I mean, there's not one event that I've missed. And, I'm okay working from 6 a.m. to midnight till 2 in the morning, whatever it is, as long as I can be there for those things. And eventually, the plan is
that's
to
really
not
important.
be working. Yeah.
Yeah. So, yeah, I would think that multifamily has changed your life outside of, the normal single family to multifamily. Again, pursuing your liberty, the freedom to do what you have to do. And, it sounds like it sounds all good and wonderful, but can you tell us, we're all interested, like, at what point do you feel like, okay, this is working for me? At what point, how many doors, how many assets do you feel like, okay, this is now I'm able to scale, and this business is working in the direction I was hoping it would be?
I don't know if there's a set number for me to say that. I definitely, the goal I have in mind right now and the number I want to hit is 10,000 doors. But before I hit that number, I know I'm going to feel like, okay, this is working. It's when things just start clicking, when the systems I'm putting in place for acquisitions just starts spitting out deals after deals, and the same procedures I'm putting in place for asset management just start producing these amazing properties, and that's when I guess on that journey, and when I really start seeing it, that's when I'll know.
Okay, so you have 17, did I say 1,700 doors?
Yeah, it should be
1,400 doors, 1,700 doors on the GP side. And you still feel like it's still hard, it's still uphill battle, it's still a grind. Some people say, oh, it's at 1,000 I can feel this way. It's not, right? It's tough work, right? I think a lot of people don't realize how tough it is. We heard last week from Chris Tao. He's going to the properties every month. He's there. It is hard work. What are you saying no to? What are you saying no to in terms of your properties? What are you not gonna work? What doesn't work for you? Are you saying no to chillers? Are you saying no to flat roofs?
I don't think I'm really saying no to anything. I feel like if everything is inspected correctly, and you know what you're getting into, you know what you're buying, you know what it's going to cost to harden that property to bring it up to where it needs to be, then as long as you're buying it at the right price, then it should be okay. There's some things that, chillers and boilers, yeah, I'm going to look closer into that, and I'm going to make sure, we just did one on Friday. We just did a due diligence, and one of the boilers has a line that's leaking. That's an issue. We got to make sure we've got enough in there to cover that. Flat roofs, I love flat roofs. A good flat roof can last you so long, so much longer than a shingled roof. I'm trying to think of something that I would say no to.
You know, these deals are very challenging to get into. So let's talk about, you found that problem with that chiller or the boiler. Are you walking away from that? Is that something that's a no-go, or what is a no-go for you?
It's a no-go if the seller's not gonna negotiate the price. You know, if and not that I'm gonna retrade everything. You know, maybe I put enough in the contingency because I knew it had boilers to begin with and they were older. You know, I look at a lot of these things during the property tour too. I don't kind of wait for the due diligence. I also ask a bunch of questions about the previous capex and just information that'll give me an idea of what the deferred maintenance is going to look like. But yeah, I mean, if the seller, if we find something, you know, if there's 6 sewer lines that are leaking under the slab and it's going to cost us who knows how much to fix all that, and there was no way for us to know that, and the seller doesn't want to negotiate on the price, then yeah, we'll probably walk.
Yeah, it's tough decision to make.
Mm-hmm.
I'm curious, what kind of advice do you have for new investors or passive investors? What is something like, what's the most valuable piece of advice that you got that you would want to share with somebody?
Someone that's a passive investor?
Passive investor or somebody that's looking to be a syndicator like yourself or a sponsor?
I'm trying to say something different than I usually do, but I mean, it's been so, I would say focus on if you want to be an active multifamily investor, then make that your focus, go all in, learn everything you got to learn, and don't get distracted by other investments or other, there's so much noise out there. You know, don't try learning multifamily investment while you're trying to learn the e-com business, or you know, focus on one, master it, and then if you want to, you know, go get something else, go for it.
Yeah. Hey, I really loved your recent post. In fact, I read it, and my husband's been saying it for the last 3 days. It's the 5 and 5 rule. If it's not going to matter in 5 years, don't spend more than 5 minutes on it. I thought that was excellent. You guys, if you haven't heard that, I think it's something to be thinking about. Can you give me some examples of the 5 and 5 rules that maybe you said, this is not worth it, I'm pushing it away? Curious.
Oh man, you know, I'm a strong believer of, if there's no reason in stressing or wasting time and energy over things that you have no control over, and I kind of judge things that way, like why am I going to get upset or stressed over, I'll give you an example, which is happening a lot right now, right? Elections. I'm not going to get into politics. I'm going to stay far away from politics, but a lot of people upset about the elections on both sides. I'm not. I mean, it is what it is. You know, I can't control it. I went and voted. That's what I could do. And I just see so much energy being spent on these things, and
yeah.
Why? Control what you can control, and focus on that.
I think that's so wise, especially, you know, the politics going on currently. But I think it's really, I know that you have a full-time marketing person. You and I have spoken about that, and I know that is one thing that I've been challenged with, and I think that, you know, we can decide where our value is. Is a cost me $100 an hour, $1,000, or $10,000, to kind of decide where to spend our energies. And I thought, you know, when you said that, the 5 and 5 rule, I thought that was really important. with the marketing, you've given that out. Is there anything else that you've kind of pushed away, like, okay, that's not important to me, so I can focus? Maybe it would be helpful for our listeners to know what, you know, you're focusing on the expensive stuff. What's your recommendation on what's the expensive stuff?
I mean, the stuff that's gonna really propel you forward, you know, doing events like this, talking to investors, putting yourself in uncomfortable situations, is usually a good measure. You know, people get stuck in their email and doing a lot of data entry and just like easy things because it's easy. But when you spend most of your time on the hard things, that's when you start growing and moving forward. You know, even I'll give you a stupid, but you know, maybe a good example, but you know, my admin sets all my appointments because I don't want to spend that energy in it, and I don't, and it's, since I started doing that, I mean, it's amazing because I overthink things, and I don't want to put appointments in there because then it's like, oh, well, I need to work on this project, and you know, she doesn't do all that. She just sets it. If it's open there, it's set, and once it's in my calendar, I'm doing it. So
yeah, that's hard. That's hard to give it up because, you know, you do want to have an opening for something that may take priority. So that's a tough one to give up. You know, 2020, I'm not going to say it's been a bad year. Many of us have grown by leaps and bounds. And it's really a blessing for so many of us. I know I've said this before, but I am so grateful for Zoom. Every day I'm on my grateful book saying I'm just so grateful for Zoom. It has allowed me to reach and extend my arms to so many people. 2021, what does it look like for you? What can we expect to see from George coming out of Texas? Where are you going?
2021. You know, if it's anything like this, like we're ending this year, there's going to be a lot going on. You know, this last month and a half feels insane. Literally feels like one long day. So, still a lot of opportunity out there. We still have, my opinion, I think our economy is going to come back pretty darn strong. And, you know, yes, COVID is still out there, but I don't know.
It sounds like you're gonna seize the moment and you're going to go after deals in Texas. It sounds like Oklahoma. Where else are you looking at? Any other areas, metros?
Random, but we're closing 2 deals in South Dakota, one in Rapid City and one in Sioux Falls. One of those markets that just stood out to us. We're might have at least one deal here in Dallas. Might have a second one. And what other markets? Let me see. Oklahoma City. Just negotiated one today. So definitely Oklahoma and Texas, South Dakota. Nice. Been talking to possibly Arizona. Not necessarily Phoenix, but around there.
So your pursuit of happiness, that's the last one. We've talked about life, liberty, and pursuit of happiness. So that's 2021. What are we going to expect to see? You're getting to 10,000 units, you're telling us. What are you going to do today that's going to push you out 10 years to 10,000? What are you doing today to get that done?
Constantly working on my team, on my systems, on my procedures, so that I can scale and without spreading myself too thin is very important.
Yeah.
I've been there years ago when I was trying to grow construction companies, single family investments, multifamily investments, all at the same time.
Yeah.
Didn't have all the systems and procedures, didn't quite have the right team. So growing organically and good
systematically.
growth. Yes.
Yeah. Excellent. Excellent. All right. Well, we have about 8 minutes. I'd love for us to open up the audience if there are questions that George can answer. Sandia, you've got a question.
Yes, George, your journey is quite inspiring that you have acquired so many units in such a short amount of time. How are all your deals performing? I only know about one deal. How are all the different deals you have closed so far performing through COVID? Have you had to make any capital calls? Are you able to make distributions as promised in your original webinar?
So I mean, I spoke about it. The first deal was we did a refinance during COVID. It's cash flowing. It's doing great. We're doing distributions. We've got another deal in Oklahoma that's doing great as well. We stopped distributions when COVID first hit, and we just sent distributions out October, and we should be refinancing and cashing out on that one probably January-ish. The one you're speaking of in Houston has been pretty difficult. It's been the most difficult one. Collections has been difficult on it, but we've been able to get the occupancy up. We have not been able to do distributions yet, but we've gotten the occupancy up to the point where we can refinance, and once we get that refinance, then we should be able to start catching up the investors. And then we've got one in Arlington, which we do monthly distributions on that one, and we only paused the distributions for a couple months, got everything together, and started doing distributions again, and that one's going great. And then what else? We just closed 2 deals, so yeah, we haven't done anything on those yet.
Excellent. I know it's been challenging. It's been challenging for a lot of syndicators, and it's not all fun and games, right? I mean, it's challenging. So, Daisy had a question. Daisy, what's your question?
Hi, Georgia. Good to see you. Again, I wanted to just share really briefly that we met with George when Luke and I were out in Texas. Julie connected us with him, and he was awesome and super welcoming, and meeting with us and just chatting more about the industry. So I wanted to say thank you for that. And then I had a quick question for you. So you mentioned quite a bit about systems and procedures to be able to scale. I would love to hear what are some of those systems and procedures that, knowing what you know now, you would have implemented back when you started to help you maybe get there a little bit faster or a little bit easier?
That's a good one. From the beginning, one would definitely be the acquisition side of it and the deal analyzing side of it. We've got our criteria pretty set. Like I said, we've had to change it during COVID and whatnot, but we know what we want, and if it doesn't meet our criteria, we don't pay attention to it. We do some high-level underwriting. If it doesn't meet our high-level underwriting, we throw it to the side. If it meets the high-level underwriting, then it goes to the next step. So just keeping that very systematic has made it easier for us to focus on the deals that make sense to us. In the beginning, it was kind of just looking at everything, underwriting everything. Lost a lot of time doing that.
Awesome.
Mark asks, he knows the book Transition behind you, George.
Traction.
Oh, it's Transition? It's not Transitions.
Traction.
Traction. Okay. How important is this book on EOS important to you? I'm not sure.
Yeah, it's pretty important. So for those who don't know, EOS is pretty much an operating system for businesses. It's how to track your KPIs, all the way to how to run a meeting. So that's actually the book where it really hit me as far as focus, and I realized that I was spread too thin. And then I started implementing that into first the construction company, which helped me get it to where it is now, and where I can just work on the company and not in it. And I plan on doing, well, I don't plan on it, I'm doing the same with the investments as well.
Excellent. All right, we have time for one more question. George, do you know what your link is to LinkedIn or your, I don't know if you probably just look at Jorge Abreu, probably would be the easiest. How about if you could put your contact information in the chat, would probably be that would be helpful for us. Traction, yep, that's it, Mark. Is there any other questions in the house before we transition to our next? Tina.
Yes, so my question would be, since you're talking about distributions, how did you determine how often, how many times a year do you choose to do distributions?
You're on mute. Let me see if I can help you.
Okay, I think I got it.
Okay.
I think I hit it with my elbow. It depends on the business plan, and if it's a cash flowing property from day one, I personally would love to do monthly distributions. I think investors love it. We've gotten really good feedback from it. But then there's also things. So the two properties we're purchasing now in South Dakota, we decided to go with HUD loans. HUD only allows you to do twice a year, so that's going to be twice a year. But the investors in that deal are good with that. They wanted a safe investment, and that's what these are, with really good terms on the loan. And then the heavier value add deals are going to be tough. You're not going to be able to promise that monthly. And on ours, we've done distributions or projected distributions, 6 months in, 9 months in. There's one deal that it was first year, there wasn't going to be any distributions. So it just depends.
Yeah, tough. All right, I did see one more hand. Who was it? I saw somebody had a question. Was that Brian? Yeah, Brian. You're the last one. You asked the question.
It was me, but it got answered. Thank you.
Okay, perfect. Super. All right, well, you guys, thank you, George. What a wealth of knowledge. I really appreciate you being here. Old Capital will take care of those refinances. If you need us, we're here for you. Always a good place to get your refinances done, right?